Hi, welcome back to Yahoo Finance Live on this Tuesday morning. Bitcoin prices hitting a record high overnight. This coming the day before Coinbase is set to come to the public markets in a direct listing. Joining us now to talk about all things crypto is Meltem Demirors. She is the Chief Strategy Officer over at CoinShares. So Meltem, let's just start with the price of Bitcoin hitting another record high. At what point does another record stop being exciting for the folks in the crypto space, or do we treat all our records like special children that we want to celebrate?
I mean, can you ever really stop being delighted and just thrilled at crypto continuing to break new highs? No, I don't think so. And look, at CoinShares, we publicly listed ourselves in March of this year. We're now at an all-time record high of $5 billion in assets under management in our exchange traded products. There's over $60 billion in assets under management in ETPs around the world that provide exposure to crypto. And pretty soon we're going to have a really big event in public markets. So I think for us, it's not just about the assets themselves reaching all-time highs. What's really cool here is cryptocurrencies are not only an asset class, and so we get to celebrate Bitcoin's new highs and Ethereum's new highs and all the other assets, but there's also a whole industry of companies that are publicly listed or in the process of publicly listing over the coming months and years. And that's also going to create, I think, a tremendously exciting opportunity for investors, but also going to give this ecosystem just so many different ways for people to participate in its growth.
Meltem, far be it from me to be the dark cloud toting boomer here, but if there's something that could make Coinbase a disappointing public company within its first year, what would it be?
Yeah, so I think the biggest risk here is Coinbase. 90% of Coinbase's revenue is still tied to retail trading volume, and it's very expensive, right? 250 basis points in transaction fees on average on those retail users. That's expensive. And so I think there's going to be margin compression and challenges to Coinbase's business model, right? Their margin is someone else's opportunity, and already we see other competitors in the space that are offering the same service, albeit with smaller brands at much better prices. I think the other key challenge is, since so much of Coinbase's revenue is directly tied to retail trading activity, and that retail trading activity is directly tied to crypto asset prices, the correlation between Coinbase's public market valuation and their revenues and the overall crypto market cycle is something just to watch for. Historically, Bitcoin in particular has gone to these 2 to 3 year cycles where we see a period of tremendous expansion and growth, and then we see a 30 to 40% correction, sometimes even greater. So the risk here is that Coinbase could potentially have some of that same volatility that Bitcoin and other digital assets have historically had.
And, Meltem, I think on the eve of this Coinbase listing, which a lot of folks are seeing as, kind of the end of this era of skepticism around crypto. Speaking of boomers, Bank of America's latest fund manager survey out today, 74% of respondents still think Bitcoin is a bubble. At what point is it not really worth worrying about what traditional fund managers think about Bitcoin? And how do you, as someone in the space, think about where it fits into, traditional allocation and not worry about these kind of, classically viewed takes on crypto? It's only for criminals. Oh, it's a bubble, this, that, and the other. You've heard them all.
I've heard them all. I've spent the last 7 years talking about all of those points. Look, at the end of the day, here is my main point. At this point, it is absolutely unconscionable that major commercial banks and asset managers are not moving more quickly, right? Morgan Stanley, JP Morgan, Goldman, they want to offer Bitcoin only to their wealthiest clients. And at CoinShares, we make Bitcoin accessible to everyone. When Coinbase lists tomorrow, I firmly believe within the week, it will be worth more than Goldman Sachs. Goldman Sachs, $120 billion market cap. Coinbase right now is pricing in prediction markets at $150 billion. Crypto is disrupting every aspect of legacy finance. Coinbase is in the exchange space. At CoinShares, we're in the asset management space. Goldman today employs 40,000 people, was founded in 1869, $120 billion market cap. Coinbase, founded in 2013, employs less than 4,000 people and is going to have a bigger market cap. So again, what I think we're watching here is a new guard coming in. And frankly, if financial institutions don't start to take pay attention to this and take notice and build things that their clients want, their clients are going to leave. We've been the beneficiaries of that at CoinShares. Coinbase is a beneficiary of that. And there are dozens of other companies in the crypto ecosystem that are going to be beneficiaries. At the end of the day, right, investors and capital are going to move to areas of opportunity. And I continue to believe that crypto, even at a $2 trillion market cap as an overall asset class, is a massive opportunity, a once in a lifetime opportunity for investors. And so you either get on the train or you get left behind. And I think we're close to that flipping point. And this week is going to be a major signal because Coinbase, is poised to be the biggest event of the year in public markets.
So Melton, let me just make sure I got it right. You think within a week, Coinbase could be worth more than a Goldman Sachs, but do you think it would be warranted? I mean, Coinbase has no investment banking business, for example.
I mean, look, is anything warranted? We have Nikola, fake electric car company, right, with questionable finances trading at a multi-billion-dollar valuation. Look, I'm not a judge, jury, or executioner here. I am just stating my belief that in the crypto space, there's a lot of opportunity. The other thing I will say is if we look at Coinbase's Q1 EBITDA, right, 1.7 billion in EBITDA, which brings them to about, 7 billion in full year 2021 EBITDA, if we extrapolate that out at 100 billion, that's not even close to the 25x forward PE multiple that we're seeing on most tech companies, right? And most fintech companies. So in the realm of possibility, I think right now Coinbase is potentially actually undervalued based on the numbers they're putting on the scoreboard. Now, again, those numbers are subject to some of the volatility of the crypto asset class, but over time, I do think it's warranted. I think investors are looking to allocate to high growth areas and to fintech more broadly. And there are tons of companies out there trading at 25, 50, 100, even 1,000x forward their PE multiple. So I don't think Coinbase at 200 billion is unwarranted or out of the question at all.
Yeah, I think I saw, Melton, someone do the quick math. Coinbase has 10 or 11% volume within, the total crypto trading space. So if it gets 10 or 11% of the entire crypto market cap, boom, there you go, 200 billion on a $2 trillion total space. We'll see how that math checks out, but I look forward to seeing something like that in sell side notes coming up in the coming weeks. All right, Melton Demirors, Chief Strategy Officer at CoinShares. Melton, always fun. Thanks for hopping on. We'll talk soon.